Hello and welcome to the Schwartz Advisors Report brought to you by Aftermarket News. I'm Emma Henderson, Managing Editor and Producer of Aftermarket News, and with me today is CEO of Schwartz Advisors, Rick Schwartz. Hi, how are you doing?
Great, Emma. Thanks for having me today.
Of course, love talking to you. So, you have previously stated that investors remain enthusiastic about the motor vehicle aftermarket. Now, given the current economic and political changes going on, how would you characterize investor sentiment at this time?
Yeah, it's a great question. Right now, we see three broad themes from investors who are looking at potential acquisitions in the motor vehicle aftermarket. The first theme that we see is caution, and that's understandable given the state of uncertainty in the economy right now. So the cautious investors are maybe waiting things out a little bit. They want to see how the next several months play out before they commit resources to a new investment, but they're still looking. The second thing we're tracking are more opportunistic investors. The opportunistic investors have a lot of access to capital, they have strong balance sheets, and they're looking at the possibility of buying businesses as a means to gain market share while some of the other investors are sitting on the sidelines. Now, the third theme we see is a definite trend, and that is concern. That theme would be concern. So those are investors who already own businesses that are being negatively impacted by tariffs. They're being negatively impacted by just what's going on in the economy. And those are the investors who are definitely taking a pass on any new investments in the near term.
And so what does this mean for M&A activity in the aftermarket?
Well, what does it mean for M&A activity is a really big question. We still see activity going on. So in spite of everything, the caution, the opportunistic investing, and the concern, we've seen in just the last, I would say, 30 to 60 days, announcements of both big deals like Mavis acquiring the Midas business. We've seen some smaller acquisitions in the collision space, in the WD space, and also in the car wash space. So there's activity going on, but there's no doubt that M&A activity has slowed down. We think it's slowed down on a temporary basis, let's call it the near term. Um, and there's definitely a lot of macroeconomic factors that are causing the slowdown.
So is deal flow slowing just in the aftermarket, or are we seeing it slow kind of everywhere?
Yeah, the answer is we're seeing it slow everywhere, Emma, and you can certainly point to some sectors outside of the aftermarket that are more active right now than the aftermarket. But generally speaking, we're seeing a slowdown in M&A activity. There's some data out there that shows that the first 2 months of the year, January and February, were very slow compared to recent years. But generally speaking, some of the consensus feedback that we're gathering from different sources, investment banks, private equity firms, and also companies is they're definitely gearing up for more M&A activity. Could be the latter half of 2025 or into 2026.
So if the M&A market is slowing, what do you attribute that to? And then also as a follow-up, when do you think the M&A deal flow will actually return to its normal pace?
Sure. Well, in terms of the reasons for the slowdown in M&A activity, it's due to a couple of things. First of all, we have a lot of economic uncertainty right now. We have uncertainty with the impact, both short term and long term, of tariffs. What's really going to happen? We have consumer confidence very shaky right now, and consumers are holding off on purchases, both big ticket purchases, and we're also seeing some data that shows a slowdown in just day-to-day purchases like groceries. So there's definitely a lot of concern and uncertainty about how the next several months are going to play out at the consumer level. We have some geopolitical uncertainty right now, a lot of turmoil, which is spooking the markets. And even the stock market itself has been like a yo-yo going up and down. It's been, you know, big gains one day, big losses another day. So a lot of the different elements to the economy, whether it's at the consumer level or at the investor level, are taking somewhat of a wait and see attitude. It's not stopping M&A activity, it's just taking a wait and see activity. Now, if you look at the aftermarket itself, the vehicle aftermarket, the fundamentals are in place. By that, I mean vehicle miles traveled is up year over year. We saw a decent increase through the end of February compared to the last 12 months. We even saw some good preliminary data on March vehicle miles traveled. So those fundamentals mean that the vehicles are on the road, they're racking up miles, which means that repair work is going to need to get done. Now, when it comes to non-discretionary repair and service, that's still taking place. And that's always a good leading indicator for the aftermarket. So as we see the aftermarket come back a little bit, you're definitely going to see M&A activity start to come back.
All right. Sounds like some optimism for the future. So, Rick, what is the dynamic with new car sales, and how are you expecting that to impact the aftermarket as well?
Yeah, well, there's definitely a correlation between new car sales and how the aftermarket performs. So, with new car sales in 2025, we saw the first quarter was pretty strong at the dealer level. There was definitely an uptick in new car sales, and that even continued into the first couple of weeks of April. But if you look across the board with all the different groups that are tracking new vehicle sales, there's an expectation that there's going to be a big pullback in new car buying, basically starting now through the end of the year. And the overall forecast for 2025 new car sales has come down quite a bit. Now, that's good for the aftermarket because consumers and fleet owners who are not buying new vehicles this year are going to put some money into their existing vehicles and fleets. And that not only is good for the aftermarket, but it's good for M&A opportunities down the road.
Absolutely. I am curious, how important is it for companies to still be coming up with that plan, even if they're not thinking of doing an M&A right now, just because they're a little uncertain about the market? How important is it for that planning to continue and make sure that you're prepared?
That's a great question, Emma, and it's something that we counsel all of our clients is you've got to be thinking about M&A even if you're not ready to do it today, because when it comes to mergers and acquisition, you can't just wake up one morning and say, let's go buy a business. And I'm being a little um, sarcastic there with that remark. But when it comes to M&A, these are big commitments of capital. We're talking about millions, tens of millions, it could even be hundreds of millions of dollars in capital. So businesses need to constantly think through, um, are they going to participate in M&A? And if they do, how do they prepare for it? They need to be thinking about, what do we want to buy? Do we want to buy a business that's similar to ours and make our current business bigger? Do they want to buy something that's similar and expand their business? Do they want to expand their geography? So times like now, even if there's a slowdown in M&A, is exactly when companies should be thinking about their M&A strategy so they can be prepared to um, act and be proactive when the right time comes along.
So always be ready for those next steps, regardless.
Yeah, and it's the same. It's actually your M&A strategy and is no different than your business strategy overall. You need to constantly be thinking about what should we be doing today and what should we be doing in the next 3 to 6 to 12 months. And it's kind of like chess. You want to be thinking ahead and you want to be prepared to what's the chessboard going to look like in 6 months? What's the chessboard going to look like in 12 months? You take in data points like interest rates. Where do we think interest rates are going to be? Then you look at your competitors. Who else is out there buying businesses? What are they doing? If one of your competitors suddenly is not able to get deals done for any number of reasons, does that mean that we should be more aggressive and try and buy businesses before our competitors get back on track? It's, M&A is a lot like chess.
That's really interesting. Well, Rick, thank you so much for joining us today. That has been an episode of the Schwartz Advisors Report. Thank you so much for joining us.